Audio check. 1, 2, 3. Testing audio.
All right, good morning and welcome. It is Monday. It's time for Monday's strategy planner session. Welcome back. So, too late to break. We're going to be talking about this setup in a couple minutes not because it is forming, but because there's one element to it already, and that doesn't always develop into the actual setup, but let's be prepared. All right, a little bit of a hiccup there. So we're going to be prepared for the too late to break setup in case that forms. But right now, just to point out and segue from Saturday's review, which identified or discussed all the reasons why this weakness was still likely just a temporary pullback, why this weakness could already be done, how we would know that this morning, and then also why this weakness could instead, even temporarily, extend a little bit deeper. Maybe not a little bit, but deeper anyway. So, none of which has been answered or is even cluing us into an answer by this overnight action, which has immediately gapped up. So, Friday even, in the preview to the Saturday review, I pointed out that we were entering the weekend pessimistically, but without sellers gaining traction for that effort. And that hasn't been either by proxy, by opening then deeper. We went out testing, overlapping the prior day's low. That hasn't, by proxy of last night's open or even indicated this morning, to gap down or extend down and just pick up where price action left off with that sentiment. It hasn't, by the same token, been rejected. Gap up, hover sideways, but only back to Friday afternoon's highs. Not even to the noon hour highs, or at least not above them. So that's optimism. Really don't get any more optimistic than that, almost. Gapping up, fluctuating entirely in positive territory, probing a prior timing windows high. You don't get much more optimistic than that other than to actually do something with it. Break higher, trend higher. So this is what I call ineffectual optimism. It still hasn't answered the question. The pattern remains just as free to resume the decline, temporary as it may be, or not. That is even though sellers aren't gaining traction for their effort, that is a sequence that can persist, repeat indefinitely. It doesn't repeat infinitely, but it can just keep ratcheting price down with weak-handed sellers, stronger-handed buyers being patient, letting them do that, letting them make prices more attractive. But while we're able to tell that from the characteristics of the behavior, it's not a new trend. So what about this too late to break? Because this qualifies as sideways action, even though it's gapped up, it is demonstrably within the confines of the bias signals. It doesn't matter that the overnight isn't making full use of that range. It is sideways. If that's not clear to you, let me know. This would be sideways, but it's sideways action, and that's not the setup. The setup is if there's sideways action and a breakout develops, if that breakout is timed to the 8:30 window, 60, 90 minutes pre-open, if there's no breakout before then, and there is a breakout in that window, then very likely that breakout's going to return into the range. So 8:30 comes along, and there's a break higher. From some level, at some point, this range is going to be retraced. Breakout comes along, it could be a breakdown. Some point this morning or later, often it's during the open or early morning, there will be a reversal back into the range. Where? Well, take the internal measurements of that range, not the extremes, but the pivotal high and low. There's the 61.8 and its counterpart, 38.2 retracement, basically 65 to 67. So if there's a breakout in either direction during the 8:30 window, and not until then, we'll expect it from whatever level, and that's just the other analysis we'll do in real time. As price gets to an extreme, we'll spot signs of that. And then we'll expect it to come back to the 65, 67 area. And knowing that there's that likelihood, we'll be able to game out the risk reward to see whether it's even worth positioning for that reversal or just being ready for its test in that area. And what we don't know also with any degree of likelihood is whether that reversal back into the range is just to back test, tag up before resuming the original breakout, or whether it's to reverse more substantially in the opposite direction. So that'll be something as well that we'll look for indications of. But that's really it. I mean, nothing going on. At least there's that going on, which is half of something going on, which may not actually be going on. So, any questions, though, please ask. As far as other markets, so the euro had come down Thursday into a pullback objective and then exceeded it on Friday. It didn't do anything more than just exceed it. We've got potential down to 105.05. Probably going to test it as long as we're down here. It's not necessary, but helpful since we're down here. Unless by proxy that's rejected immediately. But all tracking interesting, possible, if not probable, turn. Gold, meanwhile, nice rally to its objective that it went out testing on Friday. Higher prior lows, that's the sequence that we were looking for on Monday's recovery. So now we're looking for a pullback into the 1895 area. Not quite all the way there. Working on it very slightly. Still in Friday's range. But that would be the bullish scenario to keep tracking. Silver down with gold. But for once, silver is more bullish. We're outperforming to the upside, pulling back less so, relatively speaking. There's really no requirement for a pullback other than I would expect silver to track along to some degree with gold at this stage. So long bond has been hitting its buy signals. Even on Thursday when we started pretty high ahead of CPI. Not that we were expecting it that day, but this was the likely pullback target for this leg, and it came that day. Into this sweet spot of uptrending pivotal support and into the interim high. Immediately rejected Friday, but that's just a little too quick to make that turn, let alone to reject it. So the down slope, downtrend of the day, of the rejection day, bullish rejection day, but told us to expect another dip, and so I traced this out. Not all the way back down to the same pivotal uptrending support. That's not necessary. It's even overkill at this point. But into the interim high, the lower prior high, because it hadn't actually been tested as support or influential. So in fact, we are coming down into that overnight. And that is, so long as pivotal uptrending support holds, which now coincides around 111.05, 111.06. So long as that holds as support, this little pullback is likely to recover, and its recovery would likely become the next up leg, if not the first. Still need to recover 114. And then crude oil flat. So there's this thing going on in the Middle East, and I'm sure you've seen it on the news. And it is responsible for a couple big gaps up. The first of which went nowhere, but corrected. So never reversed down. Never reversed down. The reversal day actually went out testing its sell signal. The next session closed within that session's range. We just never had signal that momentum was reversing down, and that created the potential for bouncing to the opposite end of downtrending resistance. So here's a downtrend channel. You can see from the little dots. Lower end influential. If that's going to be retested, then the upper end's going to be tested, and the upper end is being tested. And there's room to probe it to 89.50 while still being in the process of testing resistance, not reversing, not resuming the decline. But I will be raising the sell signal today, probably along the lines of 86. I'll just get a little preliminary indication there, but probably along the lines of 86. That back under 86 would likely reject the bounce and get back with the turn, the reversal that we were tracking otherwise. Here's a little pattern that I had traced out, had that instance or test of the sell signal actually broken. As I said at the time, I'm leaving it there, even though we flipped up instead of down, because this pattern really wants to do that. Well, this pattern is doing that. Break lower, bounce back into the channel, and resume the decline. Break lower, bounce back into the channel. It's a couple bounces. If this resumes the decline, this is a massive reversal in crude oil. So, if not, it's certainly possible events have overtaken the market, and that whole reversal just goes away. But that's where the market was before the before last weekend, and it hasn't much changed in the week since then, so it's still alive. And finally, Bitcoin. Bitcoin has a surge in here. It's really broken with, it came down to its basically sell signal. This wasn't a rock in a hard place. It was no man's land that was likely to break lower. It did break lower. It hasn't broken deeply enough where we can now anticipate a return to the lows, which these spike bottoming attempts, they're not really bottoms, spike lows, generally need to be retested. There is a setup where we'll give enough strength a benefit of the doubt, and have been willing to, and the one attempt at it, two attempts really, but one attempt at it has failed. So the reversal still hasn't gotten a benefit of the doubt, or anything to get a benefit of the doubt of. But that said, that's an interesting blip up. Especially when Ethereum had been leading the way down, actually doing what Bitcoin is likely to get done, still likely to get done. But Ethereum blipped up. There's news, but it's old. It's after Friday's close on the SEC not appealing a decision on the Grayscale Bitcoin Trust. So, where Ethereum was leading down, I don't think that I don't think that Ethereum, while it could be on its way up, is at the moment that we can assume anything more than it testing inflections. And that is retracing breakout points or their proxies. So I don't have a signal here. I mean, this is a nice little coiling pattern. It exploded higher. And the measurement of that, pretty nice, neat. Can't really see my tags here. Nice, neat Fibonacci extension. But nothing really actionable. Still in its no man's land. Not between a rock and a hard place. Just in a no man's land. And that has been reasonable guidance in all the time that it has developed, not trusting any rally, anticipating rallies to fail. So at this point, still anticipating this bounce to fail. Get out above 28.2, 28.3. I'll start giving buyers benefit of the doubt, or at least monitor for another 24-hour window of holding above resistance. The last one didn't. And has since gone on to be resistance more durably. But otherwise, just monitoring Bitcoin. All right, so any questions about any of that, please ask. Meanwhile, meet back here at 9:15, and we'll see if any immediately actionable setups have developed. Good luck today. So, a question about the too late to break. Since the too late to break setup has been triggered by overnight ranging, it hasn't been triggered. It hasn't even formed. Please go back and listen to the recording. I wanted to make clear. I mean, we're just gonna talk about the setup because there's at least one element, and that is at this moment there is sideways ranging. It forms the setup forms when there is a breakout during the 8:30 window. If there's a breakout before 8 o'clock, the setup never forms. Still hasn't formed. If there's no breakout by 8:30, it doesn't form. So those are the two elements. There's sideways ranging so far, but until there's a breakout during the 8:30 window, it doesn't actually form. Then, to trigger, we have to actually enter the cash session having broken out. In other words, if that plays out pre-open, if there's a false breakout, retrace back into the range before the open, the setup never triggers. It only triggers if there's a sideways range that breaks out between the 8:30 window, during the 8:30 window, and greets the intraday session with that gap in one direction or the other. Then it will have triggered, and then we'll be looking for a place for that breakout to reverse back into the range to 65, 67. So what defines the breakout is a breakout from the sideways range, not the bias parameters. The bias parameters are basically defining that we're still in a sideways range, even though it's gapped up. This helps us to know buyers haven't gained any traction or you haven't really pushed. There's no trending already. Now that may be ending here, but the point is, so far, this is just in the range. Let me know if I misunderstood the question. There's a lot there. Well, I know. I just I'm not going to be able to put everything on the card, but that's what the knowledge base is for. If you go to the knowledge base and in setups look this up, you'll also see a lot of instances of it having developed historically. So you can compare price action. They're not all perfectly identical, but they share the same values or the same, many of the same factors. This is pretty much, with this surge, it's not just noise. It looks like some pretty big consecutive up bars. So long as it holds the prior highs, it's still sideways ranging, but it's on the verge of trying not to be. That is not a necessary feature. That's an optimal feature always, so that there's not even any trending. So long as, we could gap up above the prior afternoon's high, so long as the bias parameters are containing price action and there's no trending, it is sideways ranging. But there's the prior afternoon's high, so this is entirely compliant, I should say. So, for instance, this is a breakout or a break out of town. Not that it's going to get anywhere or very far for very long, whatever. This no longer a sideways range. Right at an inflection, we've got acceleration, big consecutive up bars. That's just no longer in the spirit of sideways ranging. It's actually trying to break out. Now maybe it ends up only overlapping these prior highs. And maybe it then preserves some of the properties, the reversal property of the 830 breakout. Too late to break. But as far as our being able to say, look, there's a too late to break setup, no longer is this a too late to break setup. welcome back. So as I already described previously, when this was developing back here, just right after we finished the recording, no late to break, the late to break setup done, did not fully form. So this is pretty close, literally right at 8:30 we came back. So it's not official, but we're going to treat it like that. We're at least going to be cognizant of the possibility that, for instance, with 3-minute RSIs, 3-minute RSI, 1-minute RSI simultaneously diverging negatively, not just not returning to overbought, but avoiding, well, not just not making a lower high, but not even returning to overbought, that this little setup here could be on the verge of reversing down. We've got a nice little complex triangle having formed here. Looks like we came right into the 161.8. So I've got sell signal in here. Not that this is where the trigger, where a short is entered, but under 75, this is where the inflection says that momentum is reversing down. And what are we looking for? We're looking for 65, 67 area. That's a pretty generous move. So I do want to see the opening print for an idea of what to actually take as a trigger. Now, that's not necessarily going to form or form from here. So just keep in mind, definitely want to see if there's any fresh high. I'll raise this sell signal. Kind of difficult to give a buy signal any benefit of the doubt. Meanwhile, I've got to see 88, 87, 86 is the bias up target, where a lot of buying pressure is satisfied. So I've got to see this taken out. And even then, that's not immediately actionable. I'd certainly want to see maybe even from its test if we were to get up here. Just the opportunity to fade that. All right, so these are at the moment the opening parameters, and I'll update these as possible. Any questions, please ask. All right, so I'll raise the sell signal here since we've got a little bit of strength. Just really quick summary of 9:15's update is that we're looking at this as just a little too late to qualify as the too late to break. The too late to break setup that would tell us that we are going to be reversing back into the range to 65, 67 necessarily, but I'm going to give it a benefit of the doubt, or at least monitor for that for a few minutes here. There was one opportunity. Here's another opportunity from the bias up target. Here's the bias up target's resistance being met. But it's not really a setup that I'd be buying regardless of the timing of the break. It's not a setup I'd be buying immediately anyway. Not necessarily. Not in the first several minutes. So let's just give this a little window. If you are fading this strength up here to resistance, to what is the bias up target, you got to have a stop. You have to have a stop at work. Yeah, huge follow through on Bitcoin. So another 24-hour window. We'll see. It's been pretty fickle. But I'm not trading Bitcoin for 5-minute moves, which is all it's been able to produce. Or 5-minute rallies for that matter. But that's certainly appealing or compelling. Let's see. Yeah, and I'm not trading news. I'm trading organic. It certainly was telling us there was some news. We knew that was coming along. See if that's maintained, because that's what determines, might be a better sell opportunity in Bitcoin, but we'll come back and look at that when that settles. All right, so here's, this is it. This is the most that I would expect to see if this is just stretching the rubber band. Remember, Saturday review, or Friday's preview, once again, Friday had, or the weekend in this case, had been entered pessimistically, but sellers were not gaining traction for the effort. Whether that meant extending down deeper first or just immediately rejecting the couple days of pullback, that's not a reversal. We're not expecting the trend to reverse down. Now this is a pretty abrupt attempt to reverse. So, little hybrid here for the setup that really isn't necessarily in play. That's the too late to break. That is this breakout, little premature and then a little late. So not really the 8:30 window. So not a greater likelihood of reversing down all the way to 65, 67. But here's some interesting resistance measurable from all of that right here. So reversing back down to 75, 76, 75 would be my objective if looking at a risk to reward and looking for a reward component to that equation. I'd consider using 76, 75. That's going to be a hurdle, an obstacle to getting down any deeper, let alone to 65, 67, which is, again, not required. But if we do retrace the overnight range, that's the objective. All right, so now looking at the pattern, I am going to be looking for some opportunity for a long, because that's not working. And by the way, the market has not established anything here. It's been expressing buying pressure. It has not established that it's reversing up. it's on the cusp. 10:15, if it just recovers 71's bias up signal, it puts into play the bias up target. It's not 10:15. So that doesn't do us a lot of good at the moment. The levels are going to be influential, they're relevant, but they're not predictive, so we're looking for other inputs. And I do have an actionable sell under 84. So we've overlapped resistance. We've got one detached bar up here above the pre-open swings, setups, levels, a lot of resistance. Testing the bias up target under 43.84. I'm going to start giving sellers a benefit of the doubt that this pre-open explosion higher was, if not too late to break in the sense of coming back into the range, which is still open. My objective here is 75, 76. All right, so the first 15 minutes is the most volatile. I call it that, the most volatile of the day, because it is the market finding itself. Coming out of the weekend, even more so. I like to exploit it if I can get an immediately actionable signal, and sometimes stretching the rubber band pre-open will give me that, but it didn't today. We didn't have that reaction down. Instead, the inverse, buyers just kept exploding higher right up to resistance. Little overlap, picture a car screaming down the highway, slamming on the brakes and skidding up onto the curb, but still coming to a stop. That's basically what we did here. So now my assumption is that having come up onto the curb and stopped, now we're actually coming back into the lane. That's under 84 and to a more legal spot here for the car to be cruising in, which is down around 75, 76. I think that analogy is getting old. Anyway, that's not necessarily going to be a straight line. Even if we knew with 100% certainty we were heading there, it wouldn't necessarily be a straight line. So the bounce limit is 83.25. It's not necessarily a stop, but if treating anything along there as a stop, be sure to have some kind of re-entry strategy if it holds its 4-minute test. A stop should always reflect your own risk tolerance. Bounce limit is now 82. So if 82 were probed, start probing 82, and we'll do a countdown of 4 minutes. Not all 4 minutes need to be probing 82, but if we're able to sell above 82, close to whatever the 4-minute high is of probing it, that would be attractive. We've already reversed momentum down in this pattern. Its bounce limit, if tested by the usual attention span of counter-trend sponsorship, likely to resolve down. The prevailing trend, the signal, gets the benefit of the doubt until disproved. That's not enough to disprove it. So 83's first probe has scattered out its 4-minute low. Anything lower is reinforcements. The bounce limit to that is scouting out its own 4-minute high. The usual attention span of weak-handed counter-trend sponsorship, until those 4 minutes have elapsed and etched out its high, we don't know where it would be violated, where the bounce limit would be violated, where the sell signal would be violated. And it can certainly be above the inflection, above the entry even. If you entered into resistance preliminarily ahead of or in anticipation of triggering the inflection. The market doesn't care about that. It cares about time more than it cares about price. Both, but attention span is really what's guiding here. So the 4-minute high to testing the 82 bounce limit. Much higher. So there's that much room to bounce before getting a sense that it's no longer just weak-handed counter-trend sponsorship. That doesn't make this a very attractive short entry. Could throw out a limit sell up here around 85 if we get back there. It'll be very close. Doesn't make it any likelier to resolve down. It's just a really attractive short entry because it would limit the loss. We'd be so much closer where we'd know it's wrong to be short. But otherwise, that's irrelevant right now. Just waiting for this to resolve down, if it's even going to resolve down. And my objective is just the 75-76 area right now. Now, as time goes on, as we start, if we start passing the top of the hour, I think we will start passing the top of the hour. But if we haven't yet resolved down, continued down, then this is just a correction. Got to abandon it. Have to let it go. Because we start getting so far removed in time from the open. If buyers are entrenched, then they're going to be rewarded for it. So as that approaches, not that it will matter, but it's time to start looking at a buy signal, potential buy signal. And anyway, there's the 4-minute high. There's 85. We bounced back up to 85. I mean, that was 85 offer, but still, as far as the pattern goes, still within the first 4 minutes of testing the bounce limit. Still within the range that is not necessarily anything more or anything stronger than the usual attention span of weak-handed counter-trend sponsorship before resolving in the direction of the trend. We don't know. Anything higher than this 85.50 for the first 4 minutes. After the first hour, that's 3 minutes, by the way. Anything higher, and especially beyond a 1 or 2 point buffer, room for noise, and buyers start getting a benefit of the doubt that they are taking control. Here's that 3x3 test, 4x4 during the first hour. But that's what we're looking at, is the inflection point being tested, being pierced by, in this case, 4 ticks, counting down 4 minutes. That's the usual attention span of weak-handed counter-trend sponsorship. Give it a 1 or 2 point buffer, room for noise. I'm even going to be less aggressive than that right now based on some other influences and other measurement. And I'll adjust lower, but right now 88.75 is my inflection back up. So back above 88.75, that's where I'll start to give buyers a benefit of the doubt. By then, the top of the hour approaching, sellers not really dominating or overcoming buyers, they'll no longer get that benefit of the doubt. The inflection was certainly influential, productive, but not to the degree of taking control or offering any greater consequence than just to retrace back to, in this case, 79. Still a pretty productive inflection, but not enough so. So 85.50 being exceeded now to the 1 or 2 point extreme 1 or 2 point buffer, room for noise. It's a pretty compelling short entry because it is as close as we can get to where we'll know it's wrong to be short. Literally a tick higher, but my inflection, my stop and reverse to long in this case would be 88.75. That's the risk. The reward being presumably a reversal back down to 76. So let's call that a 2 point stop from here. That's a 1 to 5 risk to reward. I mean, how likely does it have to be a pretty compelling short entry? And it's not arbitrary. There are some setups going on. We can even look on the 3-minute chart and see the bias up target sitting right there as resistance. So if you're stopped out and then suddenly price reverses right back down, if your risk tolerance was more sensitive than the full 2 points buffer room for noise, and it looks like it's playing out to the downside, if you're going to trade in this window and take that kind of exposure to a stop, you also are taking necessarily that kind of exposure to a long, or to being exposed at all, in this case short. So you have to have a strategy in mind. What are you going to do? And this can't be decided at the last minute or after the last minute, but in advance. If my stop is triggered, but the parameters remain intact, where am I going to take that? Where am I going to get exposed again? Back under the bounce limit that presumably was on its way to being violated. It's an option. 61.8 retracement back to the extreme production already. Well, that happens to have been 82. Leonardo would be impressed. So even though the resistance is holding up, that doesn't mean that we're any likelier to resolve down. The clock keeps ticking, the y-axis or the x-axis keeps moving forward, and if sellers aren't exploiting the hesitation by buyers, it's because buyers are absorbing sellers. So just keep that in mind. You have to have a stop here. Don't take any greater degree of confidence in the lack of follow-through to the upside. That's not what's important. What's important is whether the upside is being reversed, and it's not, by a certain time frame, and it's ticking down. Now, the first half hour, the second 15-minute window, I should say, is totally encompassed by the first. There's been no improvement, no anything whatsoever since the opening range. So even if we knew with 100% certainty we're going to end down here or lower, this is the kind of setup, it wouldn't be surprising to see a detour like that. In other words, we're not attracting stronger-handed sellers here, so the market's going to move higher to find them to sponsor that down leg, the ultimate down leg. That's the bearish scenario if it develops. If it develops much later than this, instead of hurrying up and by 10:15 already retracing the bias down signal, or bias up signal. So the bias up signal is an interesting creature too. But for the sake of this setup, my objective is 75, 76. If sellers can just get it together here, well, if nothing else, or I should say, if we do start popping here, we've at least had a pretty good opportunity to see how the inflections are informational, influential, and they're at least going to give us the guidance to know if, in this case, short is wrong, because the different math that we apply to the different relevant swings, it's not the precise level, the precise calculable, in this case 61.8 retracement that I applied to the relevant levels involved in this reversal. But that's where the countdown begins. That's where psychologically the herd mentality is starting to look at or their attention span is starting to develop and be tethered to. And it so happens that during the first hour, that's about 4 minutes. And it identifies 1 or 2 point buffer rooms for noise. Especially during the open, we get, it's going to be a little bit noisier, a little bit more room, or a little bit more chop. But eventually possession is 9/10 of the law, which is a fallacy actually, but still, it's fun to say. And as the market continues to stake out its ground up here, even if it's not exploiting it, it is benefiting from it. So even if we do get a reversal down, that'll be taken into account. The pattern will take that, I'll take that into account in analyzing the pattern subsequently, that its reaction down is coming from having staked out this territory, as I just described a minute ago, looking for stronger handed sellers up here. Well, it could also be looking for stronger handed buyers down here. The intent being to extend higher to fulfill the expectations or the discussion we had Saturday that sellers aren't taking control, and there was an opportunity to have ended already the pullback into Friday's close. Here's the first instance of that. But still needing to find stronger handed buyers below. So we come down here, for instance, maybe to 75, 76, and then take off. That's a possibility. Still a lot of stuff that can happen in this pattern. But all your account or P&L cares about is where your stop is. And you have to have a stop. It has to be resting. It can't be mental. Like Walter Deemer says, when it comes time to buy, you won't want to. And that can happen not just in the course of an ongoing decline, but a static range suddenly breaking higher that you're short. When it comes time to buy that back, you won't want to. So I can't make the market move. I wish I could. But we do still know where critical resistance is. We know we're under it. We know there's still a path down. The longer that the price hovers up here, the more it is creating kind of a position of strength, but more of a tether that doesn't necessarily prevent dip. It just helps rescue it. But also, kind of a ticking clock if sellers aren't able to exploit the pause. And this is our cut point, basically above 87.50, but above 88.75. If sellers aren't able to exploit this pause any deeper, and they've exploited it quite a bit, these are some pretty significant moves, especially in a relatively narrow range. A lot of chop. Then they'll have missed their opportunity and price will continue playing out. So as buyers continued preventing sellers from taking control, they're getting the reward for it. And at 10:15, they may actually have exceeded the bias up target to renew the bias up, and then we're off to the bigger picture. We've got a minimum objective up here of 95 to at least be overlapped. We've got a lot of higher prior lows in here, up around 44.01. Now, just an after action report, the 43.84 sell signal never attracted reinforcements. It never traded under its 4-minute low. So that is still a valid inflection. If 43.84 were pierced, I'd expect inflective behavior, multiple points probing under it pretty quickly. Just to keep that out there. But we can also see what a difference a minute or two makes. The breakout, well, let's go to 3-minute chart. The breakout was surging a little bit before the 8:30 window, well, before the 8:30 window and productive. The actual breakout from the range after 8:30. So we weren't really governed by the too late to break setup. We can also see what happens when the clock keeps ticking and the setup doesn't work. There has to be a time limit. If buyers are going to be vulnerable and sellers haven't exploited it by the time we're entering the top of the hour, as the top of the hour even approaches, then buyers probably aren't vulnerable. So, I traced out something earlier. If, in fact, since the second 15 minutes was encompassed by the first 15 minutes, we had no post-open follow-through. If that continues to be relevant, if the downside, if there does seem to be, and I think there is, I'll come back to this later, some kind of vacuum below, then what we might look back and call a false break higher is developing. I don't want to give that too much credibility because it could be pretty significant in the interim up to 95 or even to 4401. And last the morning, by the way. So really premature to be concerned with that. Pullback limit is 90. And now it's 90.75. So inflection points, these solid blue lines, thinner solid blue lines, horizontal, not angled. These are the inflection points. This is where the pattern is telling me such and such is happening that's of significance, relevant. That's not necessarily the entry. The entry could be guided by the different nuances that we're already tracking, like knowing we're getting too late for counter trend action, or getting beyond the sell signal's 1 or 2 point buffer, room for noise. So if you're taking an early position based on those nuances, any of them, then of course you want to see that inflection exceeded as quickly as possible too. So I still have this Fibonacci scheme from pre-open. Remember, the pre-open overnight action, for that matter, is influential and combined with intraday just through the first 15 minutes. After that, it doesn't play. It doesn't influence my stuff unless post-open action has been influenced by it demonstrably. And here's a pre-open pattern. His Fibonacci projections were definitely influential. We can see hits, multiple hits. So I'm going to assume that there's going to be influence right here as well at 96.75. That'll be an important level to get through. Or not. This could be the false break. So as we start to test the pullback limit, if we do, even though we're past the first 45 minutes, this is a bias up. I'll start getting more aggressive, especially as we start coming out of the bias window. The only way to upset the uptrend, this morning's uptrend right now, is by 10:15 to have reacted back down under 71. There's all this room for selling pressure, literally to 71, and still be just a pullback. If a negative knee-jerk reaction were to develop, what did I say instead of 10:30? By 10:30 to have reacted back down under the bias down signal would invalidate that it just triggered cleanly at 10:15. So I don't know what I said, if not 10:30, but that would invalidate what was cleanly triggered. Otherwise, the morning is dominated by having outlasted the bias up signal through 10:15. Thank you. So, does that mean that it extends even a tick higher? Not necessarily, but if we're able to marginalize sellers, then we can give buyers a benefit of the doubt. We can also know, don't get too aggressive on a sell signal. Even if the first reaction down were substantial, we'd assume it's temporary. So if there were a negative knee-jerk reaction to a news item, we'd be looking for a spot to buy it confidently. So just a quick note to the YouTube visitors. As you can see, there's a lot going on, especially during the open. It's a great laboratory or a great display case, I don't know which, of different nuances, different insights that the vidiTrade methodology offers. Again, sometimes the setup can be just as, in this case, bullish as it would have been bearish. Had that breakout, that too late to breakout been timely, then we'd have likely reversed back into the range. Since it was off a little, that can have the opposite effect. It can be the opposite sponsorship. But in this case, there were other things that were suggesting the upside wasn't going to just continue relentlessly, despite gapping up, and it didn't. And that was a vulnerability to reversing down. So took that, but had a stop. In this case, a stop and reverse, and there we are, stop and reverse. You can see, though, how the calculation's just totally separate from any tactics. For any tactics, we have to have levels to go off of. And you can see how those levels were definitely influential. So I'm raising the pullback limit to 95 on this fresh high. 95 was this open on Friday. It's naturally attractive. It's naturally resistant as well. It's being overlapped. Meanwhile, higher prior lows, for that matter. What was the lower end? not the extreme lower end, the internal lower end. Coming in around 98, and then again at 44.01 a little more prominently. So given that we're in a bias up renewed in fact, I'm really reluctant to look at a sell signal. Not that that should be taken as any suggestion that the pattern's immune to a drop, a significant drop. It's just a matter of the tactic that I'd apply to it if it were to develop. So, while another way to look at that is, if the uptrend is entrenched, it may not be a single tick more productive, but if a pullback limit is probed and the usual attention span of weak-handed counter-trend sponsorship is 3 minutes, after the first hour, 3 minutes, and at the end of those 3 minutes, we happen to be trading near the lower end of those 3 minutes, or not, or we identify where the 3 minute low was, we've already bounced, I could throw a limit buy in toward those 3 minutes low. That's just another insight, overlaying the bias with the counter trend sponsorship limitation, anticipating that that sellers are marginalized, or that the uptrend even remains intact. Then I can look at what would be the risk. Where's my stop going to be under that 3 minute low? 1 to 2 point buffer, room for noise. What's my potential reward to completely retrace? Because usually a pullback is completely retraced. What's the higher objective? Potential to 44.01. And I can identify a risk to reward. See where along that risk to reward spectrum would be an attractive entry, long entry. And if the market gives it to me, it does. That's great. If not, one thing we know about the market, it moves. There's 44.01. And another influential Fibonacci, at least attractive. I don't know that it'll be repulsive. Pullback limit is 98. So I left this pullback limit noted because it was tagged. This one wasn't touched at all, so I don't have any use to know for knowing where it was. Now, just a little too in the weeds, but because of this degree, nothing to do with the number of points. That's the least relevant, the most relevant to our P&L. It happens to be the least relevant to the market. The timing is more and most important, but also what sort of Fibonacci expansions are met. I did say expansion, not extension. So, because of this, because of what was influential along the way, where that has led, I do have to, for my own methodology, raise the sell signal. In other words, I do want to keep an eye on how much room there is for selling pressure to be expended before it even suggests that momentum is reversing down. We are in a bias up renewed environment. So long as there's any momentum, it's likely to be up. And you can see from the x-axis under the chart itself is the windows, the timing windows that are relevant. We're in the AM bias window. It triggered bias up, and that bias persists through 11:30. And they are running with it. Pullback limit is 44.01. One tick higher, it becomes 44.03. And just another input that the market's giving us, the insight actually, is RSIs are simultaneously overbought. 1 minute and 3 minute RSIs simultaneously overbought. That means that if there were a reaction down here, we'd expect it to be retraced. Usually much sooner rather than later. It's certainly safe to say this is getting a little extended. It'd be great if the market just went and went until 11:30. It doesn't work like that. So overbought, well, it means that pretty much all available strong-handed buying pressure had to be in line in agreement to make that happen, and they don't get in agreement unless there's a reason for it. It can also get extended, priced out of the market. Here's the next opportunity for that, 44.08.11. I'll go back and show the bigger picture in a moment, but we know there's a lot of resistance up here. So if there's a candidate for a pullback, this is it. Strong-handed pullback. Pullback limit is 675 or 44.07. A lot of resistance up here at 44.11. Just attacking it. This is no longer useful. So I'm not jumping in here to trade a pullback, but tighten stops. Start the countdown on the pullback limit. See where the 3 minutes end, because simultaneously overbought RSIs tell us we're very likely, maybe right now, maybe a while from now, maybe usually somewhat closer to now, we're going to retrace this. And I would expect I'd use 44.11 as my reward. Let's see where that risk can be limited to. and what that ratio is between them. And by the way, not as much room for a pullback. To 95 before momentum starts to reverse down, or suggest it is. Those 3 minutes can be pretty extreme sometimes. It's totally irrelevant what the degree is. Could be several ticks, several points, quite a few points. So long as it's within the first 3 minutes, it's a combination of the usual attention span of weak-handed counter-trend sponsorship and stronger-handed sponsorship that is patiently letting the trend refuel, trapping counter-trend sponsorship, trapping shorts to squeeze them. So if we weren't deep in the heart of the bias up, the renewed bias up, I'd be looking at the 3-minute low to testing the pullback limit down to 4404.75. Give it a 1 or 2 point buffer, room for noise. And somewhere in here, say 275, I would get aggressive on a sell signal. But we are deep in the heart of the renewed bias up. So instead, kind of curious, here's the 2 points is totally exploited right now, and it can be overlapped. But even though we're coming off of a pretty extreme and likely resistance, overbought RSI suggests it'll be retested. I'd still like to find a spot to buy it. It doesn't have to be before the pullback limit is violated. The pullback limit could be violated, and then we know that the bounce is likely to fail. It doesn't diminish it diminishes to some degree. It doesn't totally marginalize the potential for a bounce anyway. But this is, meanwhile, I just want to point out, for the specific rule set that's identified here in the 3x3 test, pullback limit test, the inflection, any solid line, blue, red, green, is an inflection. The test is pierced by at least 3 ticks, so we start the 3-minute countdown. 1 or 2 point buffer, room for noise, still testing that pullback limit, still likely to resolve up, because even without the overbought RSIs that make that extreme likely to be retested, it's still an extreme, and extremes are likely to be retested. The RSIs just make it a requirement. No timing window on when that's required to be retested, or that requirement's going to be met. But that was the most compelling long entry. We're still in that uptrend. The momentum remains intact because the 1 or 2 point buffer wasn't violated. So, no, that doesn't make this, this doesn't assure us that we're going to, on this leg, just extend without relent all the way up to the origin of the pullback. We can only trade probabilities, and that's all we're trading: probabilities, likelihoods, and the nuances, like the setups, knowing that RSI says this is likely to be retested sooner rather than later. And we take a stab, and if that stab doesn't work, we have our stops. And by the way, that stab seems to have worked. It doesn't mean it did, but it gave us a really good entry, so we can drag our stop up behind it and at least limit our loss even more so, or even lock in a small profit. And if we can do that all day while getting positioned for these bigger potential moves, I'm going to end the sentence right there. So just to point out, I mean, let's just put aside the potential for a pullback, for a correction. Remember, CPI Thursday, how obviously overextended buyers were, the absolute outlook for substantial negative reaction, which the 30-year auction helped to extend. But in any case, overly and excessively optimistic ahead of CPI, and the bias parameters that were created, the bias up parameters that were calculable from the cash session close, totally defining the resistance. Well, that doesn't require being retested intraday, but it's still a likely attraction. So if we do make it through 44.11, then there is that those prior highs, higher prior lows, 44.18 area, but also wouldn't put it past this to extend up into 25, 27. Now, that's going to need to start developing. I mean, we're going to need to be blowing through 44.11 much sooner rather than later. Any questions about any of these setups, please ask. So there we are, right back to, for all intents and purposes, I mean, within a tick. That's it. That was the compelling application of testing the 3-minute low, the usual attention span of counter-trend sponsorship, 1 or 2 point buffer room for noise, before even suggesting momentum may be reversing down, and instead, knowing the requirement to retrace the high, just a very compelling long entry just to take a stab, let alone, there we are. How are my YouTube visitors doing today? Any questions about anything that we're going over? Any of these setups? Any of the decisions? The choices? Please go ahead and ask anything that I can answer. This is your opportunity without having to register for the service to see exactly what subscribers get. All I ask, if you and there's no obligation to subscribe. I'm going to show you a special promotional offer. And it'll be good today and tomorrow. It's going to be a little bit extra, actually a lot extra, for hitting the offer today. Instead of waiting till tomorrow, which will still be a deal. But in lieu of that, in addition to that, if you like what you're seeing, if you appreciate the room being open, do you mind liking? Hit like. Like me. Please like me. It helps the algorithm for the channel, apparently. And I do have people depending on me for that. Also follow. If you want to know, if you're not subscribing now and you want to know when the next we skipped months in between. We skipped September and we skipped July. But if you want to know when the next 2 morning free entry is, then definitely subscribe to the channel and apparently YouTube automatically notifies you. I don't think I get your contact info. I've never seen it. So look at that. Notice how we stopped just a tick short. I mean, it's an errant tick, but a tick. So I can't make the comparison between RSIs. It's a negative divergence. This was a negative divergence earlier. That's not a sell signal. That's a call for reinforcements first. And in fact, they came. Now notice what's happening though. Because of that, that pessimism of just attacking that actual high from a contrarian perspective, potentially bearish. We're forming a continuation pattern. Let's test that. Let's look at the pullback. This pullback leg, is that within 61.8%? Right at 61.8% of that up leg? Of that last down leg? Perfect. I got a high degree of confidence this is a continuation pattern. Now, maybe it's not. There's actually, if there's a fresh high, I'm going to look at the 61.8% retracement between the last 2 lows of this pattern. There you go. So I need to know where my stop, or at least the limit. I can have a stop anywhere I want. I don't want it any lower than 44.04. In fact, that's even a sell signal at this point, because look at what we're doing. Getting through the top of the hour. Getting closer to the bias influence lapsing. or at least holding sponsorship to the standard. Let's say that. All this from knowing that this 3-minute test of the pullback limit, I'll tell you where the pullback limit is, where to start the countdown, and how to start it. The room for noise, all that, and the likelihood of retesting, the requirement, in fact, that I have for overbought RSIs to be retraced. That risk to reward itself was pretty attractive. Then you start throwing in the implied odds, it's still a bias up. Wash, rinse, repeat. What's the new pullback limit? 44.11. Now that may be the end of the road. We're only overlapping 44.11, only overlapping the prior high. Notice that 1 minute RSI sure didn't want to get back into overbought territory on that. Maybe you can expand on that a little bit. So we've got a big site redesign going on. You probably see it on the front end. Here's the back end. I mean, vidiDesk, we've got a little bit of a change going on. I'll be introducing everyone to what that's about. I mean, things don't really change too much. The vidi views format's going to go away. It's probably not as helpful. But here's a little bit of a difference. I mean, well, here's the older version, still intact. But just to point out, so as a member, of course, you get access to this. Just published it. And you want to know what's going on? I lay it out specifically educationally, but also in a way that scientifically, I'm not an expert, but from the interest that I've had and been able to understand, how does the mind process and absorb? So I repeat a lot. I lay it out in order. We're going to visualize what's going on. What are we looking at? What are the inputs? And we're going to label those, organize those. Can we label anything? And some of this didn't come to pass, but we need to know why not. And then, so what are we going to do with it? And this is just the blog. This is just the blog. You have to have the blog to upgrade to include the add-on, the vidiROOM. One likely scenario, and why, and an alternative. The alternative. And just levels that are relevant. These don't typically change intraday. Here we are already at the maximum. I mean, this has been published here in this section. There's 4411. Big surprise. Not. And just for posterity, here's the screenshot. This should be green. And if you miss it, here's the pre-open planner session, the video. If you missed the 9:15 pre-open, there's the recording. Okay, so I'm not, I appreciate the that, but there's something that's triggering your question about session long rally. I can see 3 different things, but I don't have a session long rally set up that triggered. If you want to do a little prep, go to the knowledge bases there, a lot of stuff there. You can go directly to session long rally. I'm sure that's what you're referring to. And you can see all sorts of stuff on it. And if that doesn't answer your question, tell me why not, and then we can get right to it. I appreciate that. I will say this, the session long rally just doesn't play from over the weekend. Very few setups play over the weekend. In other words, comparing Friday to Monday, if that may be a disqualifier, but I'm not looking to disqualify. You're obviously seeing something that's making you question whether there's a session long rally. So let me know what that is. There's at least 3 different inputs. And I'll also say, as long as we're on it, just because a session long rally trades up and we're trading up doesn't mean we're in a session long rally. We're a little bit more discerning, demanding, several more inputs than just that. I like to make my job a little complicated. So here's an interesting relationship between, there's a intraday high, that's the intraday. There's the next lower intraday high, and here's a 61.8% retracement between them. This is fun, and you can play around Fibonacci's. I encourage it. It's not precise, but we come in right around 44.14. It's no coincidence that it's being influential. I don't know that it's going to be predictive, just recovering it. I don't have anything that says it has to be. Just thinking that gapping up above 77, maintaining that through 945. So 77. 77 was during the noon hour. So again, I encourage you. I've seen the logs. I know people aren't hitting the knowledge base as much as they should. I certainly don't promote it that much. But that's a noon hour high, and the session long rally looks for the prior afternoon high, not the noon hour high. It looks for trending down into the close. We had that. At least we remained under pressure for the afternoon. But the actual afternoon high came after the bias window. That's disqualifying. Not to mention, just in general, that the session-long rally doesn't apply between Friday and Monday. All right, so notice we didn't really extend much higher. And once again, RSI, 1 minute RSI, is not returning to overbought. So the most recent instance of the high is right here. 3 minute RSI overbought, 1 minute RSI. If it is, it's on the cusp. And here we are within 10 or 15 minutes of the bias window lapsing, within 10 or 15 minutes of the renewed bias, its influence lapsing. So not going to want, I'm going to be a little more cautious about betting on a 3 minute pullback limit test, the usual attention span if we can't encounter trend sponsorship. I may try to get a little more aggressive on the sell signal instead. Here's an uptrend. Kind of organized, a little off. But I know I can't be a seller above this second touch of that uptrend. I can't get any closer than 44.06 on a sell. And maybe this develops. Let's see what's going on here. Weekend, of course, presents an issue besides the noon hour high. Starting to add up there, the issues. So, I mean, I really want to caution. I definitely appreciate the curiosity into the setups, but I want to make sure that we're learning two things here. The setups, yes, but also the discipline. And it is so easy to try and fit the market, fit price action. I mean, it's really just a tendency that the mind has to try and fit price action, all this randomness otherwise, into some predictable form. And what we need to be doing is the opposite. We need to be eliminating. We need to be going through a process of elimination. Why doesn't this qualify? Don't let it suck you in or suck in your capital because it happens to share one, maybe two similarities with something that you had a good experience with. Just thinking back to my high school prom day. Anyway, the pullback here, interesting parallelism. Could be a flag, a continuation pattern as well. Burden of proof is definitely on buyers here. All right, quick announcement. I'm actually away during the noon hour today. Probably a few minutes before noon, actually. You know, I didn't notice that we'd already posted the offer. So here, I'll post it again right here. Today, so if you click through, you see the special savings. In fact, let me just go ahead and do that. So if you do this today, I mean, if you do this if you join any other time, you're paying $200 every term, every 4 weeks for the add-on, for this vidiROOM add-on to the blog. The blog updates come to you automatically through email alerts. And by the way, you may be noticing a lag. There's a lag in the room because you're on YouTube. But if you're in the room, you're in real time. I know it's only about 30 seconds or so right now, but that's a YouTube function, that latency. Subscribers are in real time. But if you join today, right now, this is 3 terms. I will manually override that to 4. I'll get you an extra $200 savings. Today. Tomorrow, no manual override. You can still, tomorrow I'll repost this link and you can join. In afternoon, you can be a member and all day, every day, from Sunday night through Saturday morning. Content, signals, etc. I think you click here. There you go. That's me. I'm already a member, though. But I'd join again if I could. So, definitely, if you have questions, there's a question. The proxy window, yeah, that's an afternoon construct. We don't ever deal with it here in the free room because the free room ends in the morning at noon. But it's something that, like any other window, the whole concept here. When you join, by the way, you'll see there's an onboarding video series for the first week that introduces you to the whole methodology. The whole point, though, the first video itself, the reason I bring it up, is it deals with tests and timing. Because this is all about tests, testing a level, and the resolution of that test during that specific window. It's not just a level, it's what happens during that window. Window can be predefined, including the proxy window. The window can be dynamic, that it opens when a certain action develops, like a trigger. The proxy window is a proxy for if the PM bias window didn't do something, or sometimes, depending on the pattern, there may be something that can develop in that specific window that can be predictive for the rest of the day. That's a pretty good setup when it develops. But when you subscribe, you get into that learning program and you see all those answers. You also, as a subscriber, you get a coaching call, free coaching calls with me. So, one-on-one on the phone. And we work on all sorts of stuff, not just the methodology, but your own trading. Find holes and plug them. Is that a window? Is that proxy window timing? Is that something that comes up in your own work? All right, so this is the room for noise above my 4404 cell signal. Interestingly, 4404 is a measurement, significant measurement from this, not a flag, but from this little price action going on. I'm still going to entertain a buy signal, but it's interesting. The same setup has 4404's significance that I defined already from it being the 61.8 retracement, the limit basically between these last two lows, a proxy for those last two lows. But we're in a new timing window, or we're within view of a new timing window, and that can be enough. Within 10 or 15 minutes of 11:30, when the bias window starts lapsing. So not terribly aggressive, but back above 44.11. Back above 44.11, I'm going to start assuming that the leg is extending. It's a little less reliable, well, a lot less reliable now because the bias will have lapsed. But objects in motion and all that. So again, the YouTube room, I'll actually leave it open. I mean, just for the chart to keep playing out. But I'm going to turn the chart off during the noon hour, and then I'll reopen it again tomorrow at 7 a.m. Well, it's 6:30 a.m. 7 a.m. we do the strategy planner. If you want to join us live, otherwise I post the recording here in the chat window on YouTube. 9:15, the pre-open update, where we go ahead and segue into what's actionable, the tactics. As you can see, it's just an ongoing morning of insights. I don't know what we're going to be learning each morning till the market throws it at us, but then I share with you what the methodology says. And we have tactics separate from the methodology, but based on it, tactics for actually exploiting it. There's a lot of stuff on the site. We've got a knowledge base. I mean, we just talked about one setup today, really. We have a couple dozen setups, and they're all documented in the knowledge base with historical dates of their instances. So you can, if I throw out, hey, Globex flip, go to the knowledge base, go to the setups, pull up the Globex flip, and you will see a list of dates through the years that it has formed. If your charting package lets you just scroll right back, you can pull up those other instances, compare them to the one that's developing, and already know in advance what it's likely to look like. How would you want to trade that? right, so I happen to think it's worth 1 month subscription to get exposed to that. That's $175. The deal, if you do it today, actually gives you an extra $200 discount. So you get 4 months free to the vidiROOM add-on. And if nothing happens in the market, I'm just going to keep talking about the deal. Any questions, please ask. And by the way, just so you know, there's a chat. You can't really see it from your perspective. But here it is. There's a chat that members have access to in this format. So you're interacting with me all day long and with other members. And then, as I showed a little bit ago, the blog updates, where to find them on the blog, but also they're emailed to you automatically. And maybe the biggest selling point of all, totally clean. You can have the speaker on with your family around, gathered around, watching as well, all ages. It is possible to trade without swear words. And don't forget, we cover all sorts of markets here. All other markets. You're also free to ask. If you're a paying member, you can ask me for a chart analysis. On Saturday Review, you can just throw out a symbol, and I'll do a full-blown, on-demand, instant analysis, see what's going on, if anything's going on, anything you need to know about. During the week, if there's something developing, let me know what's going on, and I will pull up the chart and real quickly give you parameters. Okay, so thanks everyone for the YouTube visit. I appreciate it. I'm going to leave the room open a little bit, but I won't be commenting. I won't be updating the chart at all. If you're not an active member, you might not know already the tactics. Of course, that's a big thing, is to teach you the tactics so that I can just update. We do start off the week with a lot more discussion. The mornings are always very discussion oriented because I want to get everybody in the groove, especially when we have new members. Question, is there also a discount bonus today for the VIP trader level? There is, yeah, today it's just the one offer. There's no better offer than that. I mean, I just don't make that offer outside of this YouTube room, basically, for Jeff's. And that is that extra, I'll just do a manual override. Megan will do a manual override and add a fourth term so that you'll get 4 free terms to the vidiROOM instead of just 3. But that'll go away today. That manual override has to be done today. Tomorrow it'll just be the 3 terms. Still a pretty good deal. I think that was your question. Let me know if not. So it's not just a matter of picking good spots. It's a matter of the market doing what we think it's going to do and what the nuances say it should be doing. That's where the degree of confidence comes in. Bounce limit is 44.01. Now, I will be away from the screen. For the next hour. The noon hour, by the way, volatile, less reliable. So 98, not a bad spot to just fluctuate around. Waiting for the next setup to form. Thank you, Neil. Well, that's great timing. So literally as much buying pressure as could have been expended was expended. And then boom. That's the grace period. So this is the bias signal, the bias down signal at 95. And it's being overlapped within 3 minutes either way. Overlapping it within 3 minutes either way of 120. That invokes the grace period. Now, we're about to trigger no bias. Right when we got to 120, this happened. If that's a knee-jerk reaction to news, if that's a headline reaction, we don't want to give it too much credibility. We want to assume, or at least give a benefit of the doubt, or at least be prepared for 43.95, the bias down signal, to hold as support, to be the lower end of the range. We did just come from the upper end. So I'm cautioning patience here. I don't think that's it. That's a little bit old, and I appreciate that, but it's he announced his visit overnight, I think. He canceled all of his, he was going to be in Colorado. Had to cancel that. So invoking the grace period. The grace period is invoked. We would have known at 120, but now we have to wait till 130 to know whether the bias signal triggers or not. I mean, we're just trading a headline at this point. We don't even know what the headline is. We know the relevant levels. If this is the low, my buy signal is back above 92.75. It sure feels like it measures like a headline reaction. There's the typical 38.2% reaction and then extending down to the 38.2 projection. Very common measurement of headline reactions. So knee-jerk reaction to a headline is just going to be temporary usually, especially if it's too late, maybe if it's in the context of an ongoing development, ongoing trend. Even then, it can suck the oxygen out of that move and interrupt it. So no assurance that this is going to extend, but here it is 130, the bias down signal, lots of noise, but lots of input, no signal. So I would assume if this is the lower end of the range, we're going to bounce back to the upper end of the range. We don't actually have a target. There's no actual requirement. So it's not optimal. But, I mean, that could be it right here, 4,400 half. But if we trade the probabilities, if we have the right measurements, and we know the inflection does what this inflection, exactly what it's supposed to do. It can give us a good kickstart to a bigger move, but at least if you're just going to scalp, know that these levels are likely to produce some immediate profitability. Likely, not required, not assured. Pullback limit is 96.75. All right, so before you go, if you could like the YouTube channel, make sure you have subscribed to it so you'll know when the next freebie is. But I'm sorry, it's tomorrow morning. Same thing, just not as good as a promotional discount, which you're still welcome to take today if you hit that promotional price today. Still welcome to it, the extra $200 savings. But for now, I am closing the YouTube simulcast. Thanks everyone for being here. Have a great day.